What's up, everyone? How we doing? Can everyone hear me? Hopefully everything's coming through loud and clear. All right. Give everyone a few minutes to kind of trickle in here. Good evening. Good, very late evening for our European friends. Good morning, I think, to some of our Asia Pacific people. Good to see everybody. Everyone chiming in here in the chat. Thank you all for tuning in. This is going to be the first episode, hopefully, of a ever-evolving show. What this is going to kind of be is going to really be around not only setting up your week or how to kind of prep and kind of get organized to start your week, but really, looking at what's been going on, what happened last week, what do we have coming up on the docket for this week. Let's watch the market open. Let's see all the craziness that kind of comes with a Sunday Globex open. As you know, it can be a little volatile, a little wild, very wicky, very illiquid, just to kind of kick us off at 5 p.m. Central here. Hence why we're starting just a smidge early. Give us some time to kind of settle in and look at a few things before we get a chance to watch that opening bell here on Sunday night. But as it evolves, I want to hear from you guys. I want to get feedback and understand, what would be helpful for you. I take market prep at a very, I would say, elementary level at times, because price action rules everything. So you could have the greatest, be super prepared for, whatever is going to come out of, the market open, and then we get a situation like last Sunday, and you kind of just take your market prep, light it on fire, and throw it in the trash, because that's really what it kind of looked like. You had some levels down there, but we were trading at areas we hadn't seen in a couple months almost, and you're kind of flying at the seat of what is the Bank of Japan going to do next, and we basically got a pretty good excess low and built off of that. So that's kind of the gist of this. We're going to be diving into a very light market prep, or at least aspects of what I look into as far as establishing a prep. And like I said, I don't overthink it. Price action is going to rule everything, because there's been so many weeks when you get started, you do something, and the market just kind of punches you in the face, or just kind of takes your entire plan and chucks it in the garbage. So that's how at least how I like to approach it. And we're going to kind of evolve things and see where it goes from there, like I said. But if you do not know me, if you do not know my story, I found Topstep in probably late 2022, early 2023. And the reason I found Topstep was, I was trading my own capital for a long time, but I was probably part of basically the first round of the tech layoffs in early 2023. And with that comes, when you're looking for a new job, you're trying to figure out what comes next. Preservation of capital, and that means your own capital in your own pocket. So for me, finding a firm like Topstep was allowing me to keep doing what I was enjoying, while I was working / I guess should be working more. Maybe that's why I got laid off. Kidding. But the logic was, the prop firms like Topstep had kind of allowed me to still be active, still trade, still make some passive income while I was still looking to find and kind of figure out what was the next move. It evolved from there, guys. You guys know my story. I think some of you at least do. I got pretty good at this. I think I've got a good feel for the markets. I've got a good read on, price action and how to actually be effective, I would say, as a day trader. Doesn't necessarily mean like that's the best time frame for everybody and every trader out there, but for me, it kind of works. So I was able to kind of, transition this into almost a full-time gig. And I know you guys have seen me on the leaderboard. You've seen me trade live on fast markets. So naturally I was looking for how could we get more involved? How could I do more things with this firm and, being able to help people on this journey? Cause I think we all have kind of started in different stages and are at different areas in our trading journey. And for me, being able to help others is how I learned. I had a lot of people kind of start out and offer me a lot of their time and without really looking for any sort of monetary figure involved in that. So I'm trying to also pay it forward. Hence why I've tried to be, more and more involved. So that's a little bit about me. If you don't know, I am married. This is actually a wedding photo of mine. We got married in Sedona last year. In 2023 in May, and we actually have our first little girl on the way. So we are very excited, but Topstep has allowed me to kind of continue to, execute in the lifestyle that I was accustomed to working for big tech for a long time. But now finding that kind of different career path, I'm taking a complete pivot. So if you were wondering, who is this guy? Why should I care what he's got to say? I like to think of myself as a half decent trader, always learning, always evolving, but somebody that's just a regular guy. That's really the truth behind, my story and my journey in this space is, I was never in this for, trying to make ungodly amounts of money and things like that. For me, this has always been viewed as a way to make passive income. And it's allowed me to keep the lights on and keep doing what I like to do every day without having to necessarily go back into the Mag 7 world that I came from. So like I said, I'm going to kind of take you guys through a number of different things here this evening. And, I want to hear from you guys too. What works? What you're looking for more out of when it comes to this. Like I said, I keep market prep super, super light at times because it almost can get information paralysis if you go too in the weeds or you just have too many levels on your chart. So we'll dive into a little bit of that here today. So that long-winded explanation here, but yeah, this is me and my wife in our beautiful day after shoot in Sedona. But before we get to the market open here, I would like to take a quick look at actually, where should we start? Yeah, let's look at kind of last week. I think last week, let's see if this transitions correctly. Okay, my charts are working. I did want to double check that everything was going to transition. This is going to be it's not necessarily, sticks on the ground and bubble gum that we're kind of putting this together, but this is the first true time I'm, kind of really taking a good stab at OBS to kind of run this here. So bear with me if there are any technical issues or things, but I think we've gotten majority of the kinks worked out. So if you're familiar with, or if you've watched me on TopstepTV before or on fast markets, you've probably seen my chart books. I think they look significantly different than most people. I use MotiveWave. And my chart book is going to be from an organization called Order Flow Labs. And the reason I bring them up specifically is they make my market prep super easy. I'm not an affiliate. I'm actually not associated in any way outside of, some of my trading mentors had brought them up. And I, would never kind of use a product that I didn't truly believe in and actually like and, give money to. So one of the things that they do and these indicators and things that they've built have made populating things like market generated information super easy, very similar to what we just have released with Topstep X and, kind of the Topstep daily levels. That's something you can add to your Topstep X platform, but it's the same principle on my charts where it's MGI. It's information that's easily available on any charting platform that you can add and be given insights of, these are just things that the market is telling you, but now you have it in a very specific level. What's the value area high? What was the overnight high, the overnight low? These type of things are, interesting aspects to have marked on your chart because I think Coach Jay likes to say this, but obviously that area met someone meant something to someone and there's a reason behind it. So with my charting and things like that, it tends to take it just a smidge to the next level. And I've evolved this over time. There's certain things I think become a little bit of noise or are less important, but MGI is probably the most important thing that I use in market prep because it's telling us, where the market's been and where it potentially could go next. So what we're looking at here is a 4-hour chart. And if you guys remember last Sunday, we kind of had that, whatever you want to call the Bank of Japan doing, that Armageddon kind of sell down that we had with them raising rates. And then you guys all know what happened in the middle of the week where that kind of got turned on its head and they walked back that statement and, almost as like a laughing stock as far as a central bank, as far as a way to kind of conduct business. It's one thing I would hope the Fed never does in a very short time frame like that. But what we saw was actually a pretty decent excess low from, kind of the early part of Monday. And we pretty much had been bidding off that levels where if you were buying the dips, even I think the sell down we had on Wednesday afternoon into the close, which kind of spooked me a little bit that maybe we would go down and retest that low, but we failed. And what you see here on the right is, you guys may know me, I'm a very big volume profile trader. So when you kind of dissect the week, or at least as I was doing yesterday, you look at this volume profile and you kind of see, okay, the value area high up here, value area low, but all of that volume for the entire week, it basically showed us that we were kind of just balancing in that new range and these new areas, these new lows that we kind of, went back to after that we, I guess, hadn't really traded to since, whatever it was, June. I know it seems like these are levels that we haven't seen in a long time, but, basically what this is telling me is that the market still is kind of looking to make a decision here. We were pretty balanced. Obviously, we started to kind of bid up off that area, and I've continued to kind of move slightly higher. But we kind of took a trip up here, whatever it was, on Tuesday, went back down, retested, couldn't establish or couldn't really break below 5,200 on ES with a lot of enthusiasm. So naturally, we kind of started to return back to value. And in my opinion, where we are right now is the market's kind of at a decision point, at least in the short term of, are we going to, once again, make an attempt to go retest this low, or are we going to, return to an area of value back up towards, 5,400, 5,440s, or maybe even make a trip to 5,500, where you see here on the right, basically being last month's, I guess it's 3 weeks, about 3 weeks worth of, a point of control, and July's value area low right here around 55.30. So that's one thing I'd be looking for is, do we start to see buyers early in the week? And do we start to build some volume kind of, if you see here on the right, this very thin area between 53.70 and 54.40. In fact, if I'm looking at doing like a basic market prep for this week, where would I kind of be looking for longs above, shorts below is probably going to be at last week's point of control even, around 53.40. Those are the kind of areas that I use to, establish not necessarily a bias, but a direction of where I think, not necessarily an area that I'm maybe looking to enter, but I know if we continue to build volume, let's say above that point of control from last week, that's a pretty indication that I'm safer kind of being on the long side of trades a lot of the time than potentially looking to short at any point. Because most likely if we are trading towards kind of where we were closing on Friday, it could be potentially a low probability trade. But at the same time, when you kind of think of, well, we were sort of balancing in the last, basically in a balance of last week, maybe you're doing the classic Nick Dolby range trade and you're looking to fade that top. So there's a place for that too, where if you start to see buyers kind of push up and fail, come back down, then maybe it makes sense to look for a short and maybe traverse this area of value back towards that low at 5,200. So I think someone was asking in the chat, what is a volume point of control? Volume point of control is basically going to be the area in an auction or in a specific time frame, however you are looking at volume profile, where the most the most buying and selling took place. So the most volume occurred at a specific, let's say, price point. So on ES, last month that was around 55.30. And last week, the most volume basically was traded around 53.45. So when I say point of control, it basically acts as just a high volume area in a an indicator like this, a volume profile. There's a ton of ways you can look at it. I think even the new Topstep X levels have point of control. If not, even the volume profile you can select for any time frame inside of TradingView or your charting software. It's all going to be there. It's a very easy way, like I said, to kind of establish a good way of looking at the auction in probably a slightly different way. I don't see a ton of people use volume profile. In fact, I know Hoag's a big fan of it. I know Dee's a big fan of it. It's something I use day in and day out, and it's probably the most simplistic way to understand, market generated information. But I'm going to pause there because we are coming right in hot at the Globex Open here. They're just going to give us a quick picture on kind of where we're opening to kick off the week. I didn't see anything too crazy as far as, overnight or over the weekend type news that would give me any indication of a direction. But it's something to, really always do when you're doing your market prep is, kind of understanding, was there any news, geopolitical, financial, whatever that happened over the weekend that could affect it? The only thing I did see was somebody from the Bank of Japan, a former board member, had said that the Bank of Japan will not be able to hike again this year. So former BOJ member saying that, which if they're not hiking, still seems a little dovish to, whatever's going on up there. So naturally we're seeing a kind of a bid out of the gate to start the open here. Yeah, definitely bidding. We're even seeing a 100 lot already on the bid. But one thing to remember about going into this week, and I'll dive into some news here shortly as far as like what's on the docket, what's on the agenda. This is a big week. And the reason I kind of kick things off to start this with, whatever your market prep may be ready to throw it out in a hot second if the auction is telling us something different, where, even this open out of the gate, is somewhat interesting and somewhat telling. But the reason I say potentially throw your market prep out this week is because it's CPI week and it's also options expiration week. And you guys know me, I love to talk about how the options market could potentially move the futures market day in and day out. It's something we'll dive into in a little bit, but definitely is a week to, if we just even add it to what we've seen in the last couple of weeks, which is a very illiquid, auction at times where we're seeing larger spreads in NQ than we have and very thin, bid and ask on ES. It's the same principles. I think that when we were selling down last Monday, when Dakota, Hoag, and myself were on Fast Markets talking, where, Dakota's been trading micros. I tend to still trade minis, but I've sized down a little bit. I've widened some stops a little bit. It's just the kind of the market regime that we might be in this high volatility, higher VIX, situation. So with things like that come, ways to kind of manage risk. And on a week like this, where we have options expiration, like I said, we'll dive in a little bit about what I'm seeing in those levels. And we're going to talk a little bit about how I use them and how you could potentially use them if you kind of like using them as a different way to kind of, augment your trading style or just something else to kind of utilize as market generated information. It can turn on a dime during the, RTH hours, but the larger strikes with, let's say no expiration in sight, so the ones that are much further out, not 0 DTE, it can give you a little sense on direction on a longer time frame as well. Like last week, we saw people finally start to hedge a little bit, I think because of the risk factor with the Fed potentially cutting and whatever the heck is going on in the Bank of Japan. So those are things we'll dive in a little bit deeper to, but let me actually do one thing. Wanted to jump to my trading view here. So we talked a little bit about, how to use volume profile to set up aspects of your prep. One of the other things I like to use is just having a good understanding of, where the moving averages are sitting, as well as, how to draw, let's say certain levels or things to kind of utilize your trading going forward. So for example, on my 1 hour chart, one thing I like to use to kind of guide me is, where are we sitting in terms of the moving averages and how that relates to volume profile. For example, if we look at last week's range as well as all of August's range here, which would be the yellow one you're seeing on my screen, green is last week's range. You see the same profile that we kind of saw already in my motive weight charts. But what you're also seeing is us kind of pinned between the 200-day moving average and the, if I remember correctly, this is the 100. Yes, the 100-day moving average. So another semblance of that we may continue to balance in this same range. It's something where, to get really enthusiastic on longs, I probably want to continue to see volume build like we've already started to do to start Globex here, but maybe even push above this 100-day moving average, maybe even push us to 5,400, and start to kind of fill in some of these low volume nodes here. And maybe if we start to do that, if we continue to kind of move upwards, I would expect us to make a trip towards the 50-day moving average as well as the 100-day moving average, the 20-day moving average up here at 5,500 and 5,450 respectively. So one thing, like I said, I'd be looking for is if we're going to continue to bid is going to be, where could we potentially go? Where would be, if I got long now, let's say, and I'm looking for, hey, where would I start taking profit, or where would be a place that I may expect to see sellers return to the auction? Well, a good thing that I like to do sometimes, where is it? I know Dakota's a fan of this, but sometimes you can even draw boxes, something as simple as that, as either a range that I'm not interested in potentially looking to initiate a trade in because it's a low volume node, which means potentially sellers could, step in and sell us back into an area of higher volume, or we could traverse this low volume node very quickly and go back into an area of the auction up here on ES, back in kind of the 5460s all the way up to 55.15, 55.20. When it comes to volume profile, that's typically what you would start to see where, a low volume node is exactly what it sounds like. Not a lot of volume took place in the auction there. So when that's what that means typically is that we didn't spend a lot of time there. We didn't really have much of an auction there. There wasn't a lot of buying and selling occurring in those price levels. So that basically would mean, like I said, we could quickly traverse it, or we could just kind of peak above, fail, and come back in. Typically, like I said, not something I'm really looking at as an area I would really want to potentially initiate unless you really see buyers start to potentially come in, step on the gas, or I'm seeing options activity that would potentially, represent a good area to really want to initiate. So that's an area to kind of keep an eye on this week is do we start to go in and start to fill in some of that, low volume there and continue to build and bid higher. Sorry, I have a dog that is losing his mind. All right, so let me jump over to NQ as well, because you're going to see something a little bit similar. Let my volume profiles load here. And I would also say this, guys. One of the reasons I utilize ES a lot more for market prep is it just is a lot cleaner when you look at things like SPX and SPY, and it just makes more sense. It's when I look at options activity with SPX specifically, it's just a much more liquid and highly transacted, instrument that's used, and it correlates as a hedging product a lot of the time with the S&P 500 futures contracts. So a lot of the time I will always, initiate my market prep using ES and then translate roughly the same areas to NQ because they are highly coordinated. So yeah, what you're seeing here, the same thing on NQ. We saw that similar kind of balance here towards the middle of the week. And then obviously on Friday, we were pretty much bid out of the gate and kind of continued to build a little higher. So it's the exact same play that we were just looking at and building on ES, where if we continue to kind of hold this level, hold 600 especially, like I would be using maybe 550 as kind of my NQ pivot for the week. Same thing, where if we didn't, let's say, continue to build volume up here, I would expect us to kind of maybe rotate back down towards 18,250, back towards the 200-day moving average again. So you see a very similar, very similar play as far as like how I'd be looking at this week when it comes to setting things up or looking at, where would I be looking to initiate trades? The first trade is, potentially looking at, do we return to balance? Do we keep kind of balancing in this area, or do we kind of get that breakout? And if you get that breakout, I'm not going to be the first person to jump on it, but provided that we kind of clear this area in the 600s in NQ, there's a clear path that maybe we go make a run at 1900. And if we get some bullishness this week with options expiration, 20K is not out of the books when we've seen how things can be moving, especially in the near term with a more volatile, illiquid market. I have not been checking the chat, so if there have been any other questions, you guys can feel free to pepper them in too. I'm happy to keep answering, keep evolving, and talking about things you'd be interested in kind of understanding here. Let's see, there is one. Okay. So I'm not sure exactly what this one is referencing. So is that overnight and RTH for your volume profiles? So if we were talking about this one, this is a 1 month volume profile. So basically it's going to be just August to date, as well as last week's range. So very similar. However, you saw the early part of this dump that we kind of had at the end of July. But you can, if we were to look at July's distribution as well, you kind of see, other areas where if we did build above kind of the 600 area that I'm talking about, where could we return? Well, we might go back to this point of control back here at 19,200. So just something to kind of keep in mind and look at when you're, like I said, when you're looking at, okay, hey, I'm long, where would I potentially be either expecting sellers to return, like I said, or a place that you could potentially be covering a larger, more outside type move. So I typically, when I'm day trading, I will use, if you guys have seen my chart, my execution chart, when I'm day trading, I look at the daily chart, which will include the overnight session as well. And then I have a 4-hour chart right next to it just to keep me honest. And I have other charts too. I have a 30-minute and a 1 hour that are on other screens. But my execution chart is typically a 1 minute NQ chart when I'm actually, I would say, fiddling with the DOM and things like that. But then I always have a 4-hour as kind of my guiding light, if you will, because it really does keep you on, the right side of trades, the right side of trend at times on a longer time frame. And then it gives me, since I'm such a volume profile trader, areas in the auction that I would expect, same thing, buyers to step in, sellers to step in, where we may reject. If you guys have ever seen my style of trading, I'm not necessarily fading moves, but I look for short-term exhaustions that I could potentially, scalp 20 to 30 points on NQ out of, or a quick 10 on ES. Where are those points? For me, I find a lot of those areas on a longer time frame volume profile, whether it's a week, whether it's a rolling 15 days, which will be 3 weeks, or it's a 4-hour, which one of the things I typically use on my 4-hour is going to be a visible range, which is available, in TradingView, and I think a lot of different, charting platforms as well, where same thing, as you scroll the volume profile, and keep in mind, I have a very robust platform here, so it may not load out of the gate. It's trying to, but the logic is with the visible range, if you zoom out, if you change the time frame a little bit, it will adjust accordingly. So it'll basically build me a new histogram of volume based on, all of the candles that are on the screen. And then another question, am I a scalper or do I hold more long-term? for me, I am absolutely a scalper. If you've seen me on TopstepTV, you've seen me on fast markets. I am not greedy with my trades. I'm not a home run hitter. I wouldn't necessarily say I go for base hits, scalping a few points here and there. But for me, I look for typically 30-point rotations is kind of a good take profit, and then, hold a runner, or continue to let it ride. A lot of the time, if you've seen my style, if it, let's say, dumps a quick 20 points, I get that move, a few minutes after I entered a trade. I may take a full, put my stop, if you will, at that 20, 25 point level, and then just kind of let it ride. If it keeps rolling, I'll keep trailing it down. But for me, I'm happy to take 20 to 30 points on a quick move on NQ, just because, I know I can do that probably twice a day. And if I do that with my sizing, 2 to 3 contracts, typically, that's $2,500, and that's a hell of a day. And it's a good way to kind of lock yourself out and move on to the next day. So definitely a scalper. Every once in a while, I may catch one, but if you have seen my trading, if you've watched the show at times, especially in the afternoon, or even if you kind of see me in the chat, I am like one of the best afternoon paper hand traders that might be at Topstep, as far as folding the move just a smidge too early. And we are getting a bit of a sell here. I didn't see the NQ DOM. Are we? Oh, yeah, we are. If you want to have a seizure, please watch my DOM here on NQ on the right. If you want to see how illiquid the Sunday Globex session has kicked off. So wow, look at that. This is what I was talking about. If you're going to trade the open on Sunday nights, Godspeed. It's not my place. And I know Mr. Slow Markets, I don't know if he's in the chat. I haven't been, actively reading every single person's message. But if Dakota's in the chat, I know he's probably foaming at the mouth to jump in at Slow Markets with you guys later tonight. But like I said, when we were kicking things off here, it's so illiquid at times. One of my mentors, I think, was talking about order book depth, and it's not great, guys. Like, we're still in, as volatile as sessions have been lately, we're still in summer. A lot of traders, a lot of volume just has not returned to these markets yet. So size down, trade micros, widen your stops. If you're trading NQ, say a prayer before you place your order, because when you see this, it could get tagged without you even trying, and you can get stopped out or wicked out 25 points before any sort of direction or move has even occurred. It's just crazy to see. And we were seeing this during RTH last Monday, and even in the latter parts of the week. Yeah, that's a little crazy. And I have zero, and I mean zero, interest in trading when we were seeing, a 3+ point spread and then singles with no volume on the order book at all, like just skipping levels here. So if you've already traded this, or you are actively trading this open on NQ, Godspeed, man. It's just not my style of trading. But let me get back to some questions here. Yeah, I think I answered one of these. On my ES chart, I have last week's range and then the visible range volume profile, at least what I use. On NQ, I don't really put last week's range because I also have a 5-minute chart that has a lot of different things as well. So, when I look at my trading view is different than, my execution chart that you're seeing on screen right now. What are the 3 moving averages that I have on my charts? So my trading view, let me pull it back up. So my trading view, I use 4. I use the 20-day, the 50-day, the 100, and the 200. And I use this on a 1 hour typically, as well as my, like I said, 1 month volume profile and my last week's volume profile. Same thing, just to kind of guide longer time frame decision making on direction, on areas that are interesting. We all make this joke, I think, in this space, where moving averages only work because everyone believes they work. But there's something to that. It's at least you could think of that as it's levels, or it's moving averages are at least respected by algorithms and by traders. So yes, because everyone kind of uses them, they kind of work. And you saw it on, I don't think you saw it on NQ, but on ES, I think it did respect it pretty much on that dump. It did. So when we were trading, when the 200-day moving average was about at 51.35 as we were dumping on Monday, it kind of wicked below about 10 points and then came back. So it did hold as resistance. So it is something to always, just have an idea of. At least I like to. I wouldn't say I use them to always guide decision making, but if, let's say, one of these on ES happened to coincide with a large option strike level that I could use as a wall or as resistance, then yeah, by all means, that's a great area to potentially look at initiating along. And if you happen to see buyers stepping in at the same time, and maybe it's a low volume node and you kind of are hitting the trifecta of, things that are telling you that buyers are present or potentially will be present in that area. That's why you do market prep. That's why you potentially just have things marked on your chart. That's why market generated information is so important. Do I ever use Bookmap for my trades? Yes, absolutely. It is definitely something that I use. There's a lot of different ways, I think, to visualize the order book. But I do use it. I also use, you can see it on your DOM. You can see it on, a number of different ways, but Bookmap's just pretty simple as far as kind of, understanding it, because it's a heat map. It really does give you a good gauge versus having to kind of constantly, scroll to find those big orders. You can see them, you can have a much, more concise, view of it and still be able to see the large orders. And a lot of the time, like I said, in my experience, they happen to coincide with large option strikes as well. So you could view that as, a hedging product, or someone that's using it as, a wall, or actually initiating a trade, whatever it may be. But I think Bookmap definitely does have a place. I know a lot of traders use it. There are some, I think, that use it more effectively than others. But it's a good way to kind of understand, what's going on in the auction in a different view than what you may be seeing on a DOM. If you trade on a chart, it may be something good to incorporate into your trading as well. D wants to know if I still think the VIX can't hurt us because it wasn't real before, and if it's not real, it can't hurt you. Unfortunately, the VIX became real this past week. I think wicked to about to the 60 handle, which is kind of horrifying, but then it also just got sold right back down to the 20s. So it's teetering on, going back on life support here. If we get, any aspect of some, volatility suppression and some range compression this week, which I don't necessarily think we're going to get with all the uncertainty, with Jackson Hole still on the books, with CPI this week, there's just too much out there. I think the VIX in the 20s right now makes perfect sense, and probably where it's going to be for the short term at this moment. But we are heading into, if you're a seasonality person, if that's how you like to trade, based on that, I think you might have taken your licks a little bit this year, because this is a kind of a weirder year. But with it being an election year, with it being now kind of looking into a cutting cycle with the Fed and all the things that people are screaming recession and all this other stuff, you can get almost like information paralysis from it. So we're back to price action is king at the end of the day. For me, a heightened VIX, it just should remind you the things that we've talked about recently on the show, which is, be picky on your entries, trade a little smaller. If you traded full size minis, maybe you move to, half that size in micros, because you can always continue to add if you get a trade in your favor, things like that. But with what you're seeing on NQ with a 3-point spread, it makes no sense to oversize, because you're seeing these outsized moves. You're seeing 300 point, days on NQ, top to bottom, and sometimes in a straight rotation where it just goes up like we did on Friday. And sellers are kind of nowhere to be found. So, when the VIX is high like this, it's just a reminder to just trade a little smarter, be a little more picky with your entries, be greedy with your exits, get out, and reevaluate. That's really the truth. Have I used the big trades and heat map tools and Motive Wave? I think when I first got started, prior to kind of using Order Flow Labs as my chart book on Motive Wave, I did play around with the heat map, and it works very, very, very similar to Bookmap. It just will add kind of these big levels or big red lines. That's at least how I had it configured. The same way you'd see liquidity on Bookmap. So it's the same principle. It's just a visualization of the order book in a different way. But Bookmap's very good at what they do. Sometimes I feel like when you're doing it on the charting platforms that you're also executing on, you can, depending on the size of your computer and, kind of your specs, you could easily just kind of blow yourself up and slow yourself down and everything lags. And then you're pretty miserable. So sometimes less is more when it comes to your execution platform. Hence why, there's certain things I do on TradingView. There's certain things I do on MotiveWave. There's a visual of Bookmap that I use on something else. So it's like, you're not necessarily trying just to overload your one platform at times if you do use all these different tools. And I'll be the first person to say, you don't necessarily need all of them. You don't need to get crazy because, like I said, you can almost have information overload, which is when I start talking about, options activity here. I've gotten out of some of the older ways I used to try to visualize it because it just becomes like mind numbing trying to understand or interpret what's happening versus I'm a trader and liquidity is all that matters. And sometimes just visualizing where's the big liquidity is the most like ape brain simplistic way to understand it, execute on it, and, use it to influence your decision making to enter or exit a trade. Which VIX do I watch? Just the normal one. I mean, I firmly believe the one in TradingView is a little wonky if you use that as your watch list and you kind of have it, in the corner. I use Thinkorswim's because in my opinion, theirs has been the most accurate as far as, I don't know, even just the tick data behind it or how it's kind of calculated or how the candles are. I've just found it just seems to be more respected. Like when you see, levels being established as far as where maybe volatility sellers may step in, for some reason, it seems to behave more appropriately or what you would expect it to be on Thinkorswim. So that's where I watch it. I don't really use it in TradingView outside of just to kind of have an understanding of where it's moving. But I don't really watch it. Like I said before, when it's under 15, who cares? When it's over 20, you should be paying attention. Nick, maybe once a week, you could do a whole stream on options and the futures markets, how to gather info and how to read it. That would be cool. And one of the things I have permission. So one of my trading mentors, like I think I've described this to you guys in the past, is he's built a very simplistic model, and I'll show it to you here. There's a number of ways. I think Jack and I had talked about it before where you can look at, different ways to kind of visualize the data, but sometimes a lot of it's noise. You could open up the options chain in any platform and see open interest in different things. And, same thing. You have to kind of go out of your way, but you can do it in a very free and simplistic way. But after a while, for me personally, it just became like I'm looking at 47 different things and it's just like not exactly helpful anymore. So one of the things is one of my mentors, he founded TraderAid, which is, his organization, but what he's built, actually is a histogram type visualization of the gamma exposure. And I can't show you the 0 day to expiration ones, which is how I actively look at it from an intraday perspective, because there's no data and there won't be until tomorrow, as far as, what that auction really is looking like for RTH tomorrow. So we can, if you're on fast markets with me, I'm happy to quickly, show you guys again or tell you what at least it's looking like in the morning, just to kind of guide your decision making here. But what this is showing us is a lot of the gamma exposure going into options expiration this week is to the downside. You can see still we see a ton of liquidity at 5,300 SPX. And keep in mind, whenever I share gamma levels in the chat or on fast markets or on this, these are SPX, and the spread, I don't roughly know off the top of my head. I think it was like 30 on Friday. So anyone in the chat that actually knows what the spread will be or should be tomorrow at RTH, please shout it out so I can kind of actually articulate that to an ES level. That would be outstanding. But the logic is when I bring these up, it's always going to refer to SPX, like I said, because that's where the most liquid 0-date expiration kind of options instrument. It really is right now. SPY gets a ton, but more often than not, SPX is kind of used in that 0-date expiration, and especially for looking at, gamma exposure for market makers, for dealers, for, different hedging products, whatever it is. I try not to get too in the weeds on who these people are, what exactly they're doing. The logic is it just is going to act just like you would see liquidity on the DOM, on Bookmap. It's going to act like a magnet. So when you see these very large, pools of liquidity, potentially at 5,200, at 5,300, and then even seeing the calls and put gamma exposure on the one further down here, you get, sorry, I meant to say this is net, the net exposure versus the total. So it's the same thing. When you start to see this, it's relatively balanced, but when we're looking at the net gamma exposure, you're seeing that downside. Hence why you may kind of balance this week with options expiration on Friday for August. It can just be a weird week. So when I'm calling out these levels or when we're talking about it, as I said, this does not have a specific expiration necessarily to what you're seeing on screen right now. This is kind of the entire chain. So most likely, I don't remember what it was at the early part of last week or even 2 Fridays ago, because that would have been more telling before the Bank of Japan stuff happened. And I would assume you're seeing a lot of this, negative gamma exposure because last week might have, like we said, we saw the fear bid in VIX. You probably saw some downside hedging being established by institutions or by market makers just to protect themselves a little bit. So that's all this could be potentially, is just hedges from, what was going on last week. And, if you have ever seen what happens during, event volatility, when hedges come off, you can shoot to the moon and you can do it real quick. So it's one of these where, like I said, because this is the entire chain in theory. So basically, even could be options in SPX that are 6 months out, a year out. I don't exactly know, but when you start to incorporate, let's say, the 0-date expiration as well, and even looking at the weeklies and other things too, you can start to kind of get that picture. But the logic would be, if you don't see some downside, towards Thursday or Friday, and let's say some of these start to come off and calls start being bought, that's when you can see those very outlandish size moves that you have on days like CPI, where, someone may hedge. I don't think it's going to surprise anybody with, what that report comes down to this week. But in the event that, like I said, these hedges come off and we start to get a bid after some positive news, inflation continuing to go down, then these hedges come off and you could see calls being bought instead at 5,500, at 5,600, even 6,000, God forbid. I know on Friday there was some pretty outlandish call buying, but they got pretty much stalled. Couldn't quite get over the options wall that was sitting there. But the logic is, when you kind of incorporate, volume profile, what's going on with price action, what's going on with the 0DTs, that is typically how I trade. Everything else for me comes down to, it's probably just noise. I use Delta, I use other things too. Those are very important. But as far as kind of guiding direction or guiding, trend for me, those are the most important things. And then price action, like I said, for me can overrule all of that, because it's telling you in real time what the auction is doing and what is actually happening. And potentially that, if you go into the day, even if you did all this market prep with a bias, how you can get bit in the butt real quick. So, like I said, I have permission from my mentor to start sharing these. These are his charts. If you're interested and you want to learn more, you can check out TraderA. They're a cool company. I'm not an affiliate or anything, but I wanted to finally get his permission to actively show his charts so that people don't think I'm crazy just shouting out levels in the chat. And some of them happen to come true. So the logic is, this is what I'm talking about. How do I visualize the options data in a histogram? This is what I'm looking at every day. You'll see it in a slightly different way when it's 0DTEs, but it gives you an indication of where these just larger options liquidity areas are sitting. on the chain. And you don't have to look at open interest. You don't have to look at, other things to kind of establish that. It's just a way to, like I said, just guide decision-making without necessarily just, creating a bias. I see negative gamma exposure, but that doesn't mean anything because the second, you start to get a bid in the auction, this comes off and you can shoot to the moon. But it's important to understand that clearly there was, after a week like last week, some downside hedging, some, looking to capitalize on downside. It makes perfect sense why it looks this way. But on that front, I know we had talked about, what's going on this week, or I think we kind of bounced around a little bit this week because I've started answering some questions early, but we talked about CPI. Outside of PPI on Tuesday and CPI, the only other, big ones that I would be looking at as far as market moving, I want to say there's jobless claims. I don't know why that's not on here. Maybe it's unemployment. One of those two. I'll have to double check, but there's the typical kind of news events that we're going to see at 7:30 Central. So same thing. If you trade pre-market, be aware. The big one is going to be CPI on Wednesday. And then you couple these different, volatile news events with options expiration. I think Hogue likes to use this term, but anything can happen. It's going to be one of those weeks, especially after a volatile, downside rebid type balance week we kind of had. I mean, I don't have a good edge, I would say, going into this week. I'm very much going to be probably sitting on my hands to start the week, especially tomorrow morning. I just kind of want to see what happens. Like I said, I think I established I'd be looking for us to kind of start moving towards 5,400 and kind of making a decision. So, maybe one of these news events kind of pushes us out of this balance zone, and then we can actually get a direction and get something, actionable to trade. I know everyone's favorite, for some reason, I really don't know why, but Michigan consumer sentiment always seems to be one of the wildest DOM seizures on a Friday after the market's already opened that just crushes your stop. I don't know why. It is one of those news events that for some reason, to my opinion, it shouldn't affect the market as much as it does. It is my favorite, whipsaw news release for some reason. It's just way more volatile and back and forth than you would ever imagine. The consumer sentiment, like almost bi-weekly read, I think it is basically. But we'll have that on 9 a.m. Central on Friday. But other than CPI, I mean, pretty light week. On the earnings front, me, I'm a big fan of earnings season. It's slowly winding down until we get NVIDIA, I think in a few weeks. But the big ones that I'd be looking to watch out for or pay attention to, or just have an understanding of what good, bad for them could mean, really going to be Home Depot, Cisco, and Walmart. So Home Depot before the open on Tuesday, Cisco after the close on Wednesday, and then Walmart probably is the most important one out of all of those, at least from my opinion, but a pretty light week even on the earnings front from some of the more volatile Mag 7 names that we've seen the last few weeks. But another thing I always do, same thing, where since we're talking about market prep or how to structure your week, is going to be what are the data releases, where do I need to not get caught with my pants down type situations where, hey, if I'm in a trade, where do I need to, cut and hide, or just know that if we get an outsized move, and we're still holding, let that move into market open, it may not be something you really want to fade if you get a bid off CPI and a pretty steady bid, things like that. But news releases, earnings during earnings season. Obviously, like I said, this is a light week. You don't have anyone here that I expect to move the S&P, 2% after hours like you saw with Mag 7. And the only one, like I said, that's left that'll probably do that is going to be NVIDIA. But still an important thing to look at and understand when you're looking at the week ahead, what's important, where to focus, is going to be obviously, who are the big names that are reporting this week. And then I know we talked about it, but we've talked a lot about different, market prep levels and things like that. I will once again, commend Topstep for the great work they've done to build an indicator that I love, just because it's going to make everyone's life easier. If you like my style of market prep, this is how you do it. This is a way your charting platform can start to build some of these levels for you to take all of the thinking out of it. Very much like I said with my chart book, a lot of my, plotting the MGI levels is done for me. So I don't even have to think about a lot of these things. That's exactly what the Topstep levels, Hoag's kickoff levels in here. It just should take a lot of the guessing or even the time and prep that you even need to put into market prep to find those levels and have an opinion. No, the platform is going to spit it out for you and be accurate. So like I said, if you want to start adding some of these to your charts on Topstep X, I would highly recommend doing it. Some of these, depending on your style, could be noise and could be just a lot of fluff on your screen, depending on the type of trader you are. But it's the same thing for me. You have visible range, volume profile. And you start to see, hey, these are accurate. You got a point of control. You got a value area low here. So very similar levels that I use typically to guide my decision making or just have an understanding of where we are in the auction, as we're trading. We've now made it super easy for you guys to do. So if you're not using this, I know it was released last week. So if you haven't had the chance to really play around with it, I'm sure I would be the first person to say, I would imagine this keeps evolving. More levels, more things could be added for you guys, depending on, what's important to you. Is it last month's close? Is it where we open on the month? Is it, the last month's value area low, whatever it may be, guys, keep giving us feedback on what's important, the types of indicators that you would want on Topstep X. In my opinion, having anything that's going to make your prep and decision making easier is not only going to save you time, but even the mental capital of having to sit here on Sunday. If you're not a big Sunday prep person like I am, sometimes I do it on Saturdays. If you do it, Monday morning as you're having your coffee and sitting down and kind of understanding what happened in the overnight, that's perfectly fine. But the logic is this should take a lot of the guesswork out of it, a lot of the human error element that could even come if you're manually plotting some of these levels. And we'll just give you a good way to, if you have no market prep, if you have no idea on how to even start, this is how you do it. This is where you start. And Topstep made that super easy. So we checked out, let's see. I know we talked a lot about the indices. If you guys know me, I'm not the biggest commodities trader. In fact, outside of the lean hogs trade, which apparently I was just gifted at doing in a short time frame. Let's see what is going on with GC. Pretty quiet open. Yeah, pretty tight range. Nothing too crazy. You guys know me, I'm not a big gold trader. I'm not a big oil trader. I don't do a ton of market prep, but the same logic here. If you are, and you're using Topstep X levels, you have a lot of that done for you. So even if you're like me and you're just like, hey, I don't really trade them and I like to, or hey, it's moving. The indices are kind of a joke, especially if I was trading NQ. Maybe I jump over to CL this week, but I have no idea where to start or how to, establish levels. Well, having an idea of the previous week low, last week's high, whatever it may be, value area lows, value area highs, it gives you something to trade. It gives you an idea of, hey, where could I initiate on potentially an instrument that I'm not, let's say, fully comfortable yet with, or haven't had a ton of screen time evaluating and understanding. Same logic is it just gives you those levels and gives you a place to start. Yep, same thing. Crude, pretty tight range so far to start the Globex open here on Sunday. But yeah, guys, I know we've kind of jumped into a lot, and the logic is this segment, this series, whatever we want to call this, it's going to continue to evolve. I'd love to kind of understand what you guys want out of this. Like I said, I'm not planning on really trading this unless we get a Sunday open like we had last week, where it makes sense to maybe jump into a trade, or, you're getting some movement in both ways, or, volatile events, you've got something to trade potentially. But a lot of the time, Sunday just kind of starts out a little whipsaw-y, potentially with some gaps and just weird things that I don't love trading. So like I said, I will leave the slow markets trading to Mr. Slow Markets himself, coming up shortly after me here. But like I said, this can turn into me doing full-fledged market prep with you guys. We can kind of use this as, you guys learning a little bit more about my style, how I execute trades, how I operate day in and day out, recapping previous weeks, or even dissecting maybe trades that I took on air, whatever it may be. We can kind of use this for a lot of different things. But the logic is, at least how I've described this or wanted to build this session, is I want to give you guys aspects of tools that I use and how I structure. Because if you go into a week like last week with you may even had a plan, but after that Sunday open, you probably forgot all about it, and you probably were emotionally jumping into trades Monday. And if you went short, you probably got killed on Monday. So it's one of those where, like I said, price action is going to overrule anything you do as far as a market prep, situation and things like that. But yeah, we're going to use this as a learning hour, whatever you want to call it, with live data, because I didn't want to do this necessarily without the markets being open. It's much easier to chart and build a plan as tick data is actively flowing, and, as we can kind of see things and potentially take a trade. You never know. I could, like I said, I've said this before, I am probably one of the worst overnight traders that is at Topstep that has a live account. And I'm sure my statistics will back that statement up. I can't remember the last time I had a very good winning, Globex trade. I tend to oversize, because I'm looking for movement, and you just don't always get it. Granted, we've had it in the last few weeks, but it's not always the case, especially in less volatile markets. So how long am I planning on doing these segments? That's up to you guys. It's really up to you guys. I can ramble for hours. I can talk market prep. I can really dive into, volume profile, other things in time here. It just really depends on kind of what you guys would feel gets the most out of this. You get a lot of trading. You get a lot of trading during the week. You get a lot of education during the week. So happy to kind of do, a little bit of both of those. I don't think we've necessarily always get time to dive into some of these basic concepts, unless you're a bell-to-beller and you're listening to Hogue in the afternoons too. A lot of these kind of get brushed over, some of these concepts, or I may, hey, I took a short off, last week's value area low, and I do it on air, but we're more so kind of talking about the execution of the trade versus, what exactly is a value area low and why is that important, and why you should incorporate that into not only your prep, but your trading, day in and day out. Like, we can definitely do those type of things too. If we want to go more into the weeds on, not necessarily options, because that's a whole rabbit hole. And since Topstep that's not what we do here, really. I'm a futures trader. I know I trade options here and there, but for me, it's how to use the options data to guide your trades with futures, rather than diving into, trading options or how it works for trading options, because I'm not an options trader. I take very similar trades as I would with options that I would take with futures too. It's just, the risk is just a little different, and, you're able to kind of potentially hold it for the entire move while peeling things off the same way you would with runners and stuff like that for futures. But it's just a different trade. But since we trade futures on Topstep, that's really what I'd love to focus on. But knowing that the 0 DTE casino is not going away anytime soon, it is important, I think, for us to continue to understand how it affects the futures markets and, how to use it. So definitely, like I said, I will happily show you guys some of this information again tomorrow morning on Fast Markets. Once we can see the 0 DTE histogram too. And I'm happy to dive into it a little bit. You guys know me. I am not an expert in gamma exposure. I am not the best person to ask for some of these things as far as like what that exactly means, or whose orders are these technically, or whose liquidity is this? Like, I have no idea. And if you're thinking about that, I think you're utilizing the information in the wrong way, and it just becomes noise at that point. But yeah, we definitely can continue to jump into those things as well. Like I said, this could become a shotgun hour where we're diving into, hey, what happened last week? What's on the docket for this week? This is how I'm prepping. This is things I'm looking for. And then we can kind of, do it as a Q&A or whatever you guys would love to dive more into. Maybe some Delta. I know Mr. Delta himself, Hogue, is the king, but I do my very best to articulate it in a simplistic way. I'm a firm believer, if you don't understand a concept in trading, ask ChatGPT to explain it as if they were explaining it to a golden retriever. That's a lot of how I've learned some of these concepts, or at least had a very, first grade reading level type education behind it. That's how I've tried to understand it. And as dumb as that sounds, for some of these more complex concepts like gamma exposure with options, I highly recommend you doing that, not only for the laugh, but as just a very rudimentary level of just understanding what exactly does it mean. Carl Hungus's dog is in 3rd grade. Mine is potentially a little less than that, unfortunately. But hey, we love them. They're golden retrievers. So let's do this. Let's cut this in about 10 minutes, but I'm going to open it up truly for questions. I know we've had a lot of questions kind of coming in the chat. So if you guys had anything else you were curious on, or wanted a quick overview with me, or just anything else that's on anyone's mind here, if not, you guys can get back to your Sunday. But this is what we're going to do, guys, every Sunday. The time may evolve. I kind of like this starting a few minutes before Globex open. Just gives us time to settle in and talk a little bit before potentially you get a violent candle that kicks us off, or a gap down, gap up. So I'd love to kind of give us some time to, like I said, settle in, talk a little bit, just recap last week before we dive into this week. Coach Jay wants to know what my beard growth secrets are. Genetics, my friend. I'm Italian. And so, but actually that's interesting too, because my older brother can't grow a beard to save his life. But I can grow the full beard. So can my dad. So I say genetics, but I guess it still can skip siblings here and there. Carl, the 15 lot pulled pork will be Coach Dakota probably here in about an hour or two, when he kicks things off with slow markets. I'm sure he's ready to go full port on an NQ with a 3.5 point spread. Danielle wants me to let everybody know that hotkeys just went live on Topstep X. Speaking of hotkeys, if you don't have one of these, it'd be a great tool to start playing around with your hotkeys. And since I'm live streaming now, I have to actually finally set this thing up for not only the stream, so that maybe we get an occasional, maybe one of these every once in a while. Maybe just oh wait, it didn't go through. Maybe a nice one of those. But no, I've been wanting to do hotkeys, not only for Topstep X, but for Motive Wave, and just for a number of other things to make my life easier as a trader. And, as I'm jumping between charts, between screens, hotkeys can be a very good way to trade. If you've ever seen Rips trade, the guy trades, event volatility and breakouts with hotkeys. And I'm still, looking at him the way I think a golden retriever looks at a tennis ball. I just don't understand how he does it, but I know hotkeys are a big part of his strategy with trading breakouts and peeling things off and moving to runners real quick. And so it's definitely something I'm looking to really incorporate more with my trading, especially because if you guys have never seen me move around on fast markets before, sometimes I'm bouncing between my Mac and my PC, which is what you guys are seeing on screen. So for me, I'm almost fumbling mouses at times and hitting the wrong key. And salad handsing the flatten button on accident on a trade that was moving in profit very quickly. Yeah, won't talk about that, but you know, these things happen. Hotkeys will very much, I think, save you and make you a more efficient trader because you're not fumbling through your platform at times, especially if your cursor's on other screens. So I'm very much looking forward to it. According to Danielle, it just went live, so it's going to be a fun thing for us all to play with this week on Topstep X, being able to program those hotkeys. And Danielle, I really hope you can program the reverse button so we can have an all hotkey reversal challenge on Fridays. That'd be pretty fun to watch. Hopefully in the near term. And I also need a full port button that just immediately goes max size if we're going to, really get in the weeds on hotkey requests here. Those are my two. So, like I said, we've got a few minutes here before I'm going to shut it down. Realistically, this is going to be an hour. It probably will be maybe an hour 15. We'll see how things go or what's going on with the markets during this time. But if you guys have any other questions in the chat, feel free to, shout them out. I'll give us a few minutes here. If not, you guys can go probably watch the Cowboys lose a preseason game. If you know anything about me being in Texas, I'll be the first person to hate on the Dallas Cowboys. But that's kind of the theme of this. The joke was, market kickoff. Well, because football season's about to kick off here for all of our US friends. I know football means something different to all of our European friends and to D, but the logic is that terminology and Sundays, it just kind of came in. So the name was kind of a fun little thing that we started there, just like we did with the little, I don't know what you want to call that, little pregame music that we started to kick off the show as I was getting set up here. So this should be fun. This should be a cool way for everybody that's involved with Topstep or involved in trading futures to kick off your week. Like I said, happy to continue to evolve this segment. You guys tell me what you want to see, what you want more of, what you want less of. Even if it's just me full porting a combine, we're not going to do that. I'm kidding. But let's keep the feedback channel open with me and what you guys kind of want out of this, and how we can continue to evolve this segment going forward. And who knows, maybe we'll have some drop-in guests. I think it'd be really cool you guys have gotten a sneak peek into how I market prep, and we're going to continue to kind of dive deeper into really doing a full prep to kind of to go into the week with. But I think it'd be really cool to have somebody like Jay on or Rips and other people that I know do market prep. You may not see them do it on screen, but they definitely are doing their prep, at least a lighter version of it as they go into their trading week. So it'd be cool to not only see how I do it, but how other traders at Topstep really kind of get in the weeds. Because it's like I said, I'm still on this journey with you guys. And for me, I'm always learning. I always want to learn. I'm still trying to learn how to hold longs the way Dakota does, how to trade breakouts the way Rips does, how to, spot icebergs as quickly as Hogue does. So that's what I'd like to use this as, is, continuing to kind of be a learning hour in a way with maybe some trading, but more so, learning from each other and taking the best of what some traders do and how you can incorporate it into your own style. For example, like I said, I don't put hours and hours and hours into market prep because it just becomes too much. So you take, at least how I learned to trade and how my mentors had always kind of articulated this to me, you take what resonates with the people you resonate with, you take bits and pieces of it, you incorporate your own flair to it, your own style, and you kind of become your own trader in that way. So you take the best of certain people, you forget things you don't really resonate with or you don't care about, or it's just not your style or doesn't fit your risk, whatever it may be. But then you kind of establish a plan for yourself. And you, like I said, you have your own style at that point, your own way of doing things. I trade differently than Dakota does. And he trades very differently to a lot of other people. So yeah, we will, I guess, leave it at that if there's no other questions, guys. Give everybody a minute or two here. If not, enjoy your Sunday evening, spend time with family, go eat a nice dinner, go enjoy some preseason football if that's your thing. And be sure to tune in. If you cannot get enough of Topstep TV, be sure to tune in about, what time is it? In about an hour and a half, in about 90 minutes, maybe grab a beer, go eat your steak that you had on the grill. It's probably burnt at this point, and be ready to tune in to Coach Dakota, the master of slow markets himself, actually giving you guys some trades, because that's not what I'm going to be giving you most likely on this segment. But thank you guys for tuning in. It was a really cool first show. Like I said, we're going to keep doing this weekly. It's going to keep evolving, but I very much appreciate it. Thank you guys for being on this journey with me. And, tune in to Coach Dakota. And if not, I will see you guys bright and early on Fast Markets tomorrow. Cheers, guys. Have a good night.